Welcome to The Bull versus the Bear, the show where we break down both sides of the story for today's biggest stocks. And today we are tackling a true titan of the tech world, IBM.
You know, the debate around IBM has been raging for years. Is this 100-year-old company a dinosaur just weighed down by its own history? Or is it a sleeping giant about to wake up and completely reshape the future of computing? Well, that is the big question we're digging into today.
So here's our game plan. First, we'll look at where IBM stands right now. Then, we'll dive into the bull case, why this giant might be waking up. After that, we'll flip it and look at the bear case, what's holding it back. Then, we'll check out a data-driven analyst report from Morningstar before finally turning the big decision over to you.
To really get IBM, you gotta understand its incredible scale. I mean, we're talking about a company that operates in 175 countries, and get this, serves 95% of all Fortune 500 companies. And right now, it's making a huge pivot, shifting its entire focus to hybrid cloud, AI, and even the futuristic world of quantum computing.
Okay, so let's jump into the bull case. What has investors so optimistic? Well, it all boils down to one simple idea. IBM's reinvention isn't just a plan, it's already working.
The heart and soul of the bull argument is software, and more specifically, it's IBM's big bet on hybrid cloud. That's the tech that lets companies manage all their stuff, whether it's on their own servers or out in the public cloud. And let me tell you, this has become the company's #1 growth engine, hands down.
And the real game changer here was the massive $34 billion acquisition of Red Hat back in 2019. This wasn't just another purchase, it was a total reset of the company's strategy. Red Hat's tech is basically the glue that holds a company's entire IT system together, which makes it the perfect launchpad for modernizing old applications. And of course, this creates this amazing domino effect, pulling in more business for IBM's software and consulting teams.
And you want to know if the bet paid off? Well, the numbers don't lie. In the 5 years since IBM bought it, Red Hat's revenue has more than doubled. That is exactly the kind of growth injection that IBM was looking for.
This really highlights what bulls love, IBM's one-stop shop advantage. Think about it, almost 80% of their clients buy from more than one part of the company. Once you're running IBM software on IBM hardware and you've got IBM consultants on speed dial, the idea of switching to someone else, it becomes a massive, expensive headache. It makes for a very, very sticky business.
But of course, that's not the whole story. Let's flip the coin and look at the bear case, because they see a completely different picture. One where IBM's long history is actually its biggest problem.
Let's take quantum computing. The bulls look at it and see a future-proof leader in a world-changing technology. But the bears? They point to a pretty harsh reality. Commercially, quantum computing is probably not going to be a major moneymaker until the 2030s. So yeah, it's an amazing science project, but for today's investors, it doesn't move the needle.
And this really gets to the core of the bear argument. Can a company this huge and this old really move fast enough to keep up? I mean, history's shown that IBM was slow to the public cloud, where its own service is pretty much an also-ran compared to giants like Amazon and Microsoft. This puts IBM in a position where it has to buy its growth through these giant acquisitions, and that's a really expensive and tough strategy to maintain long-term.
Another big worry for the bears is how IBM spends its money. The company is famous for its dividend. They've increased it for nearly 30 straight years. And while that's awesome if you're an income investor, the bears argue it handcuffs the company. With so much cash going out to shareholders, can it really afford to reinvest enough in R&D to truly innovate and compete with other tech giants?
Okay, we've heard the passionate pitch from the bulls, and we've heard the serious warnings from the bears. Now it's time to cut through the noise and see what the hard data says. Let's bring in the sober take from Morningstar's analysis.
So here are the vital stats. Morningstar puts IBM's fair value at $264 a share, which, you'll notice, is a bit below its recent price. But check out these other ratings. A narrow economic moat, medium uncertainty, and a top-notch exemplary rating for capital allocation. Wait, exemplary? Let's break that down.
First off, what's an economic moat? Well, think of it like a castle's moat. It's what protects a company's profits from competitors. Morningstar says IBM has a narrow one, and it's all because of those high switching costs we talked about earlier. Once you're deep inside the IBM ecosystem, it is just really, really hard to get out. Now for that exemplary capital allocation rating, which might sound a little weird given the bear argument about the dividend. Well, according to the analysts, it all comes down to one thing, the Red Hat acquisition. They called that move exceptional, A bold, brilliant investment that completely reshaped the company and created far more value than it cost. It was a home run.
So after weighing all the pros, like that awesome hybrid cloud growth, against all the cons, like the risks from its legacy businesses, the analyst lands right here. A fair value of $264 per share. It's a clear, data-driven number suggesting that right now, the market might be just a little bit too optimistic.
All right, you've heard the bull case, you've heard the bear case, you've seen the analyst's take. Now, the final decision is up to you.
So, what's it going to be? Do you see IBM through the eyes of a bull, as a software giant that's nailed its reinvention, with a super sticky customer base and a ton of future potential? Or do you side with the bears? Do you see a slow-moving legacy company that's just buying its growth and is always one step behind the next big thing?
That's the core debate, and honestly, there's a great argument on both sides. So we want to know what you think. Are you a bull or a bear on IBM? Drop a comment below and tell us why. Let's get this conversation going. Hey, if you enjoyed this breakdown, do us a favor and subscribe to The Bull versus the Bear. We have a ton of other deep dives just like this one, and we're always adding more. Thanks for watching, and we'll see you in the next one.